We have a breaking down of the monetary order. What is the alternative money will be the question. What's the alternative money that is stable in supply?
If there are other crypto assets in the future that prove to be decentralized, we will consider them when the time comes. So we're not dismissing the possibility there would be another commodity. What's the use case of a digital token? It's for capital creation and for innovation. And whether it's a smart contract token or a utility token, or maybe it gets to be a hyper complicated token, some digital utility, 99% can fail, 1% will be revolutionary and they will change the world. I think the most important thing said in this industry in 4 years was said Friday night, and I think it missed a lot of people's attention. I don't think people really realize what happened.
So the whole purpose of this channel is to make life-changing returns by being an early-stage investor to revolutionary technology. And the best way of doing that is to predict the future. If you know how important certain technologies are going to be, and you see them trading on deep discount a few years ahead of their time, then you have the opportunity to stack the asset as inexpensively as possible and make life-changing returns. It's happened before, and we're going to dive into that. But first, let's see what some of the greatest investors of all time are predicting for the future and what it means for some of the most revolutionary early stage assets on the planet that are selling off on extreme deep discount right now. The opportunity has never been better. So first, let's see what Ray Dalio, indisputably one of the greatest investors of all time, what he's predicting for the future.
I'm worried about something worse than a recession. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. Such times are very much like the 1930s. I've studied history, and this repeats over and over again.
So he's incredibly nervous about the period we are in. What assets does he recommend putting money into in this environment?
I think all other currencies will depreciate with the dollar. In other words, it's up to each central bank, and pretty much in terms of other currencies, it's an ugly contest. So I think it would be very much like the 1970s, which was very much like the 1930s, in which they all go down in relation to gold or other hard assets like that. And, what is the alternative money will be the question. What's the alternative money that is stable in supply? Bitcoin might be a bit part of that, could be a big part of that. In Germany's Weimar Republic or Argentina recently, you can carry wheelbarrows of money and you could still exchange it. So they had so much that they couldn't count it, so they weighed it. This is literally the case. So the money can be used for medium exchange, but as a storehold of wealth, it's not going to be used, and people will look for other storeholds of wealth that are movable and tradable. You say, well, what is it that's the storehold of wealth? And you see, and I emphasize gold, but Bitcoin too has elements of that. It's not real estate, because real estate is nailed down. You have a problem with real estate. Real estate is nailed down. You can't move it around. It doesn't work that way. So I would think it's more like gold, Bitcoin. What is the alternative money?
So there's a lot to unpack there. But what he's saying is that currencies are in trouble. National currencies are in trouble. They're being debased. So hard assets are going to do the best. Assets that are a storehold of wealth, that are tradable. He mentioned the Weimar Republic. He mentioned Argentina. So let's take a look at what the stock markets did back in those hyperinflationary environments. Here's the chart of the German stock market during Weimar Germany period, literally going from like 1,000 marks per share up to 100 million marks per share. That's a hyperinflationary period. That's what happens when faith in a national currency goes down. Stock markets rally massively. Here's Argentina, right? Going from nothing to millions per share of the stock market. So he's saying gold, he's saying Bitcoin. He's not saying stocks, I'm saying revolutionary assets do extremely well. These stock markets are all driven by massive hype. During these environments, there is insane trading. Everyone wants a piece of the best quality assets, and people are just pumping money into these stock markets. So what do we have today? He's pointing out gold. He's pointing out Bitcoin. Digital gold. He doesn't know what's going on with altcoins, which back here in Weimar, Germany, and back here in Argentina would have been part of the tradable assets that he's saying should not be nailed down, right? What makes crypto revolutionary? The ability to be tradable, the ability to store value, and the ability to not be nailed down, right? That is altcoins. We know altcoins are correlated to Bitcoin. Every single other massive bull market in history, Bitcoin skyrocketed, and then altcoins skyrocketed, right? So if you're bullish on Bitcoin like Ray Dalio is, ultimately you have to be bullish on altcoins. Now, why have we not seen an alt season? The answer is explained by this chart. In black, we see the price of Bitcoin. In blue, we see global liquidity, money supply. So during this period, we saw global money supply skyrocket. This was during the pandemic. And then we saw Bitcoin's price go from 3,000 to 69,000, right? What happened to altcoins like Cardano? They 100x. Since that period, nothing has happened to the global money supply. It stayed flat, right? No new money to move up assets. Why is that? Because interest rates are the oxygen of the financial system. What have interest rates done? They've done this. They've skyrocketed, right? Back when Bitcoin went from 3K to 69K and provided life-changing returns, interest rates were down here. Look at where they are now. They're high. The Trump administration is doing everything they can to bring those down. That is the only reason. We've covered this on the channel. The macro situation is the only reason we haven't seen altcoins outperform Bitcoin. But if you're bullish on Bitcoin, like Ray Dalio, one of the greatest investors of all time is, and you understand what happens to markets in hyperinflationary economies where people lose faith in national currencies, then you understand the potential of revolutionary technology assets. So on that note, let's hear from another incredible investor, Michael Saylor, the CEO of previously MicroStrategy, now Strategy. Here's the chart of Strategy. Skyrocketed, right? He's doing something right. He's a billionaire. So let's see what he has to say about what comes next and how to take advantage of it.
I think when people are panicking, they tend to want to do a leverage short on Bitcoin. When interest rates and when the perception is we're going to a risk-on environment or a looser money environment, they'll turn the other way. So I do think that interest rates coming in or the expectation of interest rates coming in is very bullish for the asset. And there'll be certain points where you'll probably see it rip up because of that. I think there's a lot of double reverse logic that takes place in the macro trading environment. Yeah. Like, for example, if you knew there was lots of inflation over the long term, the number one thing to hold is Bitcoin. Yeah. But when people print a big inflation number, Bitcoin will trade down in the short term. But the double reverse logic is inflation is high, therefore the interest rates are going up, therefore money is getting slurped out, therefore I should find something to sell, so I'll sell Bitcoin. And that's why I would say, look, Bitcoin's going to grind up 30 to 60% a year for the next 20 years.
So he understands how important interest rates are, and he envisions in the intermediate term possibly a drop in interest rates and therefore a pump in the Bitcoin price. He's bullish Bitcoin in the short term. We know he's massively bullish Bitcoin in the long term as well for the exact same reason as Ray Dalio, because Bitcoin thrives on chaos. It thrives on money printing. It thrives on the debasement of currencies. Now, what is correlated to Bitcoin? Altcoins. In Michael Saylor's view, what is the future of altcoins? This is the big game. If altcoins have a future, then the high quality ones that are so beaten down, dirt cheap in price, will provide life-changing returns. So what is Michael Saylor's vision for the future of altcoins?
In my framework that I've laid out, and this is after hundreds of meetings and talking to people in the Senate, in the House, in the SEC, in the CFTC, in the White House, every industry participant, all the Bitcoin investors, all the crypto investors, all the crypto exchanges, all the policymakers. After listening to every minute of congressional testimony, here's my opinion. My opinion is the industry will move forward in a cheerful, constructive way with the greatest good done for the greatest number of people on earth if we define 4 new asset classes. And they would be a digital token, a digital security, a digital currency, and a digital commodity. So the right way to handle this is simply to say, we want to allow digital tokens to be issued by 400 million businesses, ideally in 4 hours for $40, right? And what's the use case of a digital token? It's for capital creation and for innovation. So let Trump coin be issued, let Katy Perry token or Joe Rogan coin or any token, whether it's a smart contract token or a utility token or a meme coin, or maybe it gives me access to, to a music library on a website, or maybe it gets to be a hyper complicated, token or NFT, some digital utility or some right that just stops short of being a security. And there's 400 million people that want to do it, and they want to do it in 4 hours for $40. If you want innovation and you want capital creation, you need that. So we don't have a digital token asset class in the United States. There isn't one recognized in the world. We need one. As soon as we have one, you'll see an explosion of innovation. A digital token, a digital currency, a digital commodity, and a digital security all should circulate, no KYC, no AML, friction free. That's how you're going to make the economy work. Most of them will fail. Most businesses fail. That's okay. Like 99% can fail, 1% will be revolutionary and they will change the world. And in the Digital Asset Summit, the president reiterated those points. I think the most important thing said in this industry in 4 years was said Friday night, and I think it missed a lot of people's attention. I don't think people really realize what happened. David Sachs, the crypto czar, what Sachs said is, Bitcoin is the asset without the issuer. If there are other crypto assets in the future that prove to be decentralized, we will consider them when the time comes. So we're not dismissing the possibility there would be another commodity, but right now we recognize one, and our agenda is to provide a legitimate framework to issue digital currencies, digital tokens, and digital securities. And of course, the president directed that should come to his desk by August.
So he sees millions of tokens being created, a whole bunch of different digital asset classes. He sees an explosion of innovation. He sees most of them failing and a small percentage being revolutionary and skyrocketing, right? That's Michael Saylor's vision of the future, where altcoins play a massively important role, and the good quality ones do provide life-changing returns to the early stage investors. So it's so crucially important we find those high quality altcoins that will provide the life-changing returns. Now, how do we find the right altcoins? This is where it gets very, 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 very important, because like most early stage technologies that aren't understood, they all trade pretty correlated to each other. Here's the chart of Solana over the last 3 months, down, right? Looks terrible. Here's the chart of the internet computer over the last 3 months, down, looks terrible. Here's the chart of chainlink over the last 3 months, down and looks terrible, right? So they're all trading together. How do we know which one is good? This is a mistake people are making. They're like, I'm going to buy the lowest quality one. I'm going to buy a meme coin. It doesn't really matter which one you buy. I'm going to buy the small cap ones because they're all correlated anyway. And it almost seems like the worse quality an asset is, the higher it skyrockets. But we've been here before. Early stage investors have seen this exact same thing in the dawn of the internet. Here's the chart of Cisco in the early days of the internet. It massively outperformed Amazon during the bubble of 2000. It went from like 28 cents up to $80. Amazon's bubble took it from 8 cents up to $4. So Cisco was way hotter than Amazon. Then between the top of the bubble and the crash of 2008, Cisco hit a low of like $10. And by the crash of 2008 was around $15. So it did a 50% move, nowhere near its old all-time high. Amazon in that same period hit a low of 30 cents and went up to like $1.30. 30. So it did a little better from the low. But at this point, you would say these assets are correlated. Cisco at a higher all-time high. Based purely on chart noise, you would make some sort of decision, and maybe you would or would not have chosen Amazon. So if you had had some sort of thought based on the price action of the charts and you decided to buy Cisco, saying, let's say it's more undervalued, you would buy Cisco at $14, and today, 2025, you would turn your $14 into $60. Look at the chart of Amazon in that same period. You would have turned your $2 if you bought Amazon in 2009 or 8 into $190. That's what we're talking about. That is fundamentals. This is why it's so important to not listen to the narratives, not look at the charts, and not think that in the next pump, all garbage is going to go up and you're going to try to cash out some trashy asset. Fundamentals are what matters. Now, why did one massively outperform the other? It goes back to revenue. How much money are these assets attracting? Well, here is the chart of Cisco's revenue from 2009 to now. It was like $35 billion over a 12-month period. 2009, now it's $54 billion. It's barely moved. Look at Amazon's. In that same period, it's gone from like 20 billion or 15 billion up to $600 billion. Revenue is what matters. What matters is what happens when the fundamentals play out and the smart money comes in and realizes which of these assets they want to park their capital in for the long term. It comes down to which of these assets is attracting the wealth of the ecosystem. Amazon is attracting massive amounts of wealth and money. Therefore, Amazon has the better exponential fundamentals, and Amazon provides that insane life-changing return. So again, in the early stages, when we're all volatile, we're dealing with interest rates, price action is just noise, just like it was in the early days of the internet. Price action means nothing. But we have Ray Dalio and we have Michael Saylor, hugely bullish on Bitcoin. We have Michael Saylor predicting a world where altcoins flourish and the best ones skyrocket, just like the early days of the internet. And so it's crucially important we find the assets that are exponential, that have exponential adoption, and are going to attract a massive amount of revenue. That is the whole purpose of this channel, to find the highest quality assets as cheap as possible. Well, here's an exponential trend. This is chainlink, right? Transaction value enabled, $20+ trillion. This looks like Amazon's chart, right? We want exponential adoption. Look at the amount of transaction value enabled by Chainlink. January 22, it was 2 trillion. It's 10x since March 2025. That is exponential. That is absolutely massive. That is booming fundamentals. What about Chainlink CCIP? Look at the network of Chainlink CCIP. It is an interoperable infrastructure that connects different blockchains together. All of these blockchains are connected to Chainlink CCIP and therefore connected to each other. That is why Chainlink is the glue that's going to hold the future financial system together, right? The future is multi-chain. Now, talking of revenue, right? We want exponential revenue. We want the assets that are going to absorb capital. Well, here's where we are today. This is April 22, 2025. CCIP, value transferred $10 million, tiny. The fees earned from that, around $2,000. Chainlink is very cost effective. This is one of the reasons why it can grow and scale, because the people using it aren't paying insane fees like if you're using Ethereum main chain. Well, Chainlink doesn't cost that much. That is tiny volume. Where are we headed? Again, we want exponential, massive growth in this revenue. The market for trust minimized applications is hundreds of trillions of dollars. This is DeFi. We're 70 billion. This is why Chainlink's revenue is so small. Cryptocurrency, 1 trillion. This is the future of the value of the world that's going to be connected by Chainlink. $1 quadrillion of derivatives, $281 trillion of global real estate, $90 trillion of the stock market, right? Huge total addressable market. How do we know Chainlink's going to be a part of this? Because Chainlink is one of the most connected assets on the planet. Partnerships with Euroclear, which processes trillions and trillions and trillions of dollars of value. Swift, which also processes trillions of dollars of value, right? Massive organizations like UBS working with Chainlink, using Chainlink. Here's Swift. Very recently, we've been working in collaboration with Chainlink and other stakeholders in the industry, leveraging AI and blockchain in order to streamline corporate action processes. This is exponential adoption. We want the assets that are going to have exponential revenue growth. That is obviously Chainlink, and that is massive. What about ICP? Well, remember, we're still in the very early stages. The internet computer has been dealing with a crypto winter for 3 years. Again, we talked about why altcoin season hasn't happened. Internet computer launched at the exact worst time. It launched at the top of the previous bull market, and we haven't had a bull market for 3 or so years, and we just talked about why, right? Liquidity, interest rates, they've all been stagnant. Well, ICP, in the midst of this winter, we've covered this on this channel a lot, 6th highest revenue generating layer 1 in the world, crushing other layer 1s with way bigger market caps. It's generating more revenue than the Telegram blockchain ton. Telegram is a multi-billion-dollar company. More revenue than Avalanche, Polygon, Near, Cardano. They all have bigger market caps than ICP. So ICP is a revenue generator. That right there is massive, right? There's thousands of these layer 1 blockchains. ICP is the 6th highest revenue generating asset. Now that's all well and good, right? What does the future look like? Well, this is the trend. This is ICP burns. How do ICP token holders get paid? Whenever anyone develops a project on ICP, they burn cycles, which in turn burns ICP tokens, making them deflationary. Very similar to how Solana and Ethereum work. This is how the tokenomics work. The more the network is used, the more tokens are burned, and therefore the scarcer the token becomes and the more value accrues to the token. That's how Solana, Ethereum, and ICP works. Well, let's look at the trend, right? Look at where we were in August 2004, practically zero burns, right? Again, we've been in a crypto winter. Look where we are now. 46,000 ICP burned, ICP tokens burned in 1 week. That is growing. So that is a trend in the right direction. Earnings, weekly sum for the last 365 days, ICP, the network earnings. So when it's negative, it means we're net inflationary. We're not burning as much ICP as we are creating as inflation. The trend, again, is up. If you think this isn't great, look at this metric for Solana. Look at this metric for Ethereum. They are nowhere close to being deflationary. ICP not only went deflationary a few times in 2024, but it's on its way there, right? We have accelerating adoption. Here's the trend of Ethereum's inflation. In blue, we see the chart of the supply of Ethereum. They did a merge that was going to send it deflationary. They realized the cost of the network prohibitively expensive, so they reversed that course, and now Ethereum is going inflationary. It's moving in the opposite direction of ICP. ICP is moving deflationary. The second the earnings go positive, ICP is deflationary. Again, we saw glimpses of that last year. Will we see that this year? Well, again, it's all tied back to usage and development. Active developers, public GitHub repos on ICP, skyrocketing. We are getting exponential adoption of ICP. That means revenue, that means profit, that means deflationary tokenomics. The trend is up and to the right and exponential for this asset. And what's so impressive is in the midst of a crypto winter with a falling price, we're getting exponential growth on this asset. Over 60,000 new internet identities created in Q1 2025. Horrendous price action, massive adoption. At one point, Amazon had horrendous price action and massive adoption. It was an incredible buying opportunity for the future. Here is one application running on top of ICP. To date, 233,000 users have signed up on OpenChat. This is a social network that runs entirely on ICP. That's what we see in brown. Again, exponential adoption up and to the right. The whole purpose of this channel is to make life-changing returns by investing on the highest quality, most revolutionary assets on the planet. Michael Saylor thinks 1% of these assets are going to change the world. To find them, you have to find the ones with accelerating adoption and the potential to generate massive amounts of revenue. That is Chainlink. That is ICP. Thank you for watching.